All right. Hello, everybody. Welcome back to another episode of the Market Close. We've got a red day. We're jumping straight into it. There's no introduction, nothing like that. It's red. Now, granted, I think there's some context for this red because, to be honest, most of the red is coming from one major stock, and you guys know what stock it is. I think the stock is actually lower than what picture I put on the thumbnail for that stock. Energy is down today as well. We'll talk about energy, but that stock is Nvidia now at 107. I think the thumbnail has it at 108, 108.65 or something. So now we're down a whole dollar, down about 9.8% of the day. Nvidia has fallen $260 billion in market cap in one day, which is pretty aggressive, dude. I'm not going to lie. That is pretty aggressive. In fact, if I'm not wrong, that is the largest market cap fall in a single day for a single stock. I think the previous one was 250 billion, and that was also Nvidia a couple of months ago. So Nvidia kind of holding on to its record of being one of the largest stocks to have a valuation decline in a single day. But it looks like we got 15 minutes until the market closes. It looks like we're going to probably see 106 or 107 on the dot, which would give us a full 10% correction. Right now, we're down at about 9.91% on the day. Unfortunately, this stock has simply just not been able to find momentum or support throughout the entire day. So we started the day at 119, believe it or not, in the pre-market. And slowly by slowly, you see a decline, 116 in the pre-market. Market opens, gap all the way down to 111. Then it just shudders around 111 for a little bit. Then it gaps all the way down to 109. Then we gap back up to 110, kind of think, all right, the selling's done. And then slowly by slowly, you just continue to fall. And now you're here at 107.3. There you go. We are officially down 10.11% on the day for Nvidia. Now, as I say this, the reason I started off the show by saying it's red, but there's some context to the red, is because, you know, Meta's down 2%, Google's down 4%. They're dealing a little bit more with some antitrust updates. Robinhood down 4%, markets down, Bitcoin down 2%. The NASDAQ down 3.4%. That's bloody. S&P, wow, S&P at 550 or 549. It's actually below 550. I haven't looked at the S&P in a couple minutes. That one is officially, down 2% of the day. These are bad days. These are red days. These are not down 10, 15% types of days, right? I mean, 2 or 3% is actually quite normal for most of the indices and for broader equities, right? 2 to 3% on equities is no big deal at all. But Nvidia is where the red really stacks up because Nvidia controls a large majority of the S&P 500 and the NASDAQ. So as Nvidia falls, the rest of tech and the rest of the broader market can also fall as well. And we haven't seen that crazy of a decline in other parts of the market, but Nvidia obviously has been the one that has taken a hit. Some stocks that hit 52-week highs today, actually, if you believe it or not, there are some stocks that hit 52-week highs. Procter & Gamble, Berkshire Hathaway, Walmart, United Healthcare, J&J, Coca-Cola, Philip Morris, IBM. Obviously, the market's rotating here from some growth names to some value names, which is why we're seeing a little bit more momentum in some of those stocks. But tech in general has not had a good day. The 10-year treasury is still at that 3.837 level, so it's down about 0.07%. That means more people are buying treasuries today, which makes sense because people are rotating out of tech. But I think the story of the day is that tech is obviously getting hit pretty badly. Where's Snowflake? You guys said check Snowflake in the chat. Wow, Snowflake down 4% as well. Yeah, and tech that's not really that exciting, like Snowflake by the street, that's going to get hit. Now, Palantir, it's been doing its best to hold on to that $30 range. Palantir right here at $30.28. Palantir also down 3.84%. We'll see in the next 11 minutes if we fall below 30. It wouldn't surprise me if you get a flush towards the end of the day as the broader algorithms step in and they start selling things off. But in general, you're seeing a pretty bloody day in tech. Again, I think we have to put it in context. Nvidia is the majority of the red. Indices are down 2-3%. That's a bad day. And that's a day that you kind of just have to deal with in September and kind of, go with the punches. But other tech stocks down 2, 3, 4%. Again, swings that you would expect on a tech stock that has had a really good year, like a Palantir or like a Google or like a Meta. But Nvidia is the story. Nvidia is the story of the day being down. So here's the question for the chat. Who bought the dip on Nvidia? And if you didn't buy the dip on Nvidia, did you buy any dip at all today? Did you do any repositioning today on anything in your portfolio? Did you sell any puts? Did you swap out different companies for other companies? Did you, I know I asked this question on Twitter. A bunch of people said, hey, I had puts on Palantir. I sold those puts on Palantir because I was on a profit for them and I bought more Nvidia. So is there any strategies? I'm very curious to see kind of what people engaged in today. For me, it was kind of a just sit back and see kind of what happens type of day. Did put some more money into my Robinhood account and have some dry powder, but this dip is just not that exciting to really get into, not just on Nvidia, but for the broader market. I think Palantir at 25 gets more exciting. I think Nvidia below 100 gets more exciting. Meta get closer to 475, 485 gets more exciting, even though the PE on Meta is 24 right now. That PE would get to like 18, but still that becomes more attractive versus just buying on a regular 2% down day that we have right now. Harmsy said, I bought Nvidia, then it carried on dipping, so I bought a bit more. Makes sense. Short QQQ was a good hedge for Lewis today. Not bad. The miners are cheap. Yeah, the miners have had a little bit of struggle today. CleanSpark right here down 15.8%. WGMI, this is the Bitcoin miner ETF. This thing is down 10.81% of the day. The Bitcoin leveraged ETF also had a pretty bad day. Actually, it recovered a little bit. Now it's down 2.38%. It was down 5%. The BitX 2X Bitcoin ETF. WGMI, an ETF to be down 10% on the day is pretty volatile. So the miners definitely have had a little bit rough of the day. Where's Bitcoin? Bitcoin bottomed at 57.5 for the day. Right now back at 58. We'll see if it holds up, but this 57 to 59 range is where it's been at. Amazon right here at 176. Boeing as well had one of its worst days in 50 years. Boeing down 7.5%. They got a downgrade to $119 by Wells Fargo that basically said, hey, they're not cutting costs fast enough, and we really don't see the growth opportunities. We did see SpaceX get that contract from NASA the other day over Boeing to bring some people back home. So I wonder, how long Boeing is really going to have until the government starts shifting some of the money that they give to Boeing into other companies. But we do see a little bit more volatility in a lot of these other names. Brandon sold 52 Hood $19 puts expiring Friday. I don't hate that. I do think Friday is going to be, if you're selling puts on Friday, you're betting on volatility, but it's really 50-50. And we're going to go through what I think is good, bad, or horrible in terms of that jobs report that we get after the bell. But got the market closing in about 8 minutes. But Friday is going to be a very volatile day. And if it's volatile to the upside, then selling puts is probably going to print. But if it's volatile to the downside, then you're going to have to figure out how to roll some of those puts as well. We got June, who bought LRCX, AMAT, QCOM. Okay, so Micron. So you bought the semis. So we do have earnings today. Let me line up those tickers. Today is September 3rd. On the day, so September 3rd, we have Zscaler. That's an important one for cyber. Then we have Asana, and then I believe we have GitLab. So these are the three software names we're looking at. It sucks for them to report on today. Zscaler's down 4%, Asana's down 5%, GitLab down 6%. Not the best day to report, but nonetheless, they're going to have to report and hopefully put up some good numbers. Trent bought Salesforce. Okay. I sold NVDA and bought puts on Nvidia. Interesting. So going a little bit more bearish on Nvidia. Brandon bought a little bit of Tesla. Where is Tesla? Did it turn red for the day? Tesla, yeah, it turned red, down 1.72%. Tesla was the only thing that was green out of the Max 7 this morning. But Tesla went down. Google, easy pickup for on beneficial. All right, so you bought some Google. Tony bought a tiny amount of Nvidia, Apple, and Cheesecake. Interesting. Cheesecake, it might end up being one of those defensive names in a recession, even though you would think it's not, because how many people are going to go out to Cheesecake Factory if we're in a recession? But Cheesecake right here down about 1.3%. So again, the big 52-week highs today all culminated in value stocks and stocks that pay a dividend, like the stocks that I'm showing on my screen right now, which was a rotation out from growth. So I think the broader question that we have to ask right now is, what does this dip mean in the context of tech, in the context of AI, and in the context of Nvidia? My stance is pretty resolute, and it hasn't changed too much. This morning, obviously, Tom Lee said some comments that got a lot of people upset, but also got a lot of people to kind of respect what he said. You had Meet Kevin taking some shots today back at Tom Lee with their perpetual feud that's going on online. But Tom Lee said, look, I think a 7 to 10% pullback can happen over the next 8 weeks, but it would be a situation to buy the dip. I don't know why this is this controversial. I think the reason people are mad that Tom Lee said this is because IWM is not at $300 yet, and people are upset that the Russell is not up 40%, which I get if like that is a big position for you and you bought it only because of Tom Lee. So I understand where that fear and anger is coming from. But at the end of the day, I think he's making a very solid and basic argument, which is, hey, if the market falls 7 to 10%, which is very possible in a very volatile election year, like if for the next 2 months, September and October, based on rate cuts and jobs reports, all that good stuff, then that's a dip to buy if we don't have recession, because the earnings growth from those companies that would fall theoretically 20 to 40% if the broader index falls 10 to 15%, I mean, those become very attractive prices. I don't think anything he said was controversial. It's just, the market's red and people don't like it when the market's red, so they're upset. So my thoughts on Nvidia have not changed. My thoughts on Palantir have not changed. My thoughts on the broader markets have not changed. Like nothing really has changed. It's just a red day. And it's one of those red days that you kind of have to live through. And this is why for the past 2 weeks, we've been getting ready for a red September. So it shouldn't be a surprise. I tweeted this morning. It's kind of funny. We all knew a red September was going to come, and then it came. And we're acting surprised again. It's like investing sometimes isn't that hard, dude. If every single September is red since 1928 on the S&P 500, then this one's probably going to be red. Even if it's a little red, you're probably going to get red. Nvidia decided, you know what, we're going to go big or go home. And they decided to just fall 9.5% on the day instead. So to me, if you're an Nvidia bull, this is not something, this type of price action doesn't really change anything. There's nothing fundamental there that changes that. If you're a Bitcoin bull, there's nothing fundamental that changes the thesis today either. If you're a Robinhood bull, there's nothing fun. Like there's nothing until September 6th when we get the jobs report that is going to fundamentally alter how I think the market is going to play out over the next 5 months. And obviously, if you're in your market for the next 5 years, then really that jobs report doesn't matter too much. But if you have some more short-term positions, if you have options, if you have certain position sizing, then that jobs report on Friday is going to determine a lot about how the market plays out. But one thing I will say about the broader market, Unity is well up 2% on the day after they got an upgrade by Morgan Stanley. I do think the market is ahead of the Fed in terms of pricing in all the momentum from rate cuts. And I think that's okay. Like, I don't think that's the worst thing in the world. Obviously, you've got core PCE, which is the Fed's preferred metric of inflation, at 2.5%. Okay, so 2.5%. Then you've got the Fed funds rate. That's more than double core PCE at 5.5%. And so you've got to ask yourself a question. Does it make sense to stay tight or stay this restrictive right now? Obviously not. Like there's no way, I don't think anyone can logically say, even if you're the biggest bear, that it makes sense to have federal funds rate at 5.5%. You would imagine you would get at least 100 bips of cuts over the next year, even though the market's pricing in something more like 200 bips. So I think the market is pricing in an aggressive Fed cutting cycle with growth that has been justified by Nvidia, Palantir, et cetera. They have shown the growth, but the market's like pricing it for perfection in terms of that growth. So Q3 earnings cannot go bad. They've got to go good. And the Fed has to cut at least by 100 bips towards the end of the year, which the Fed should be cutting by 100 bips. I don't think that's controversial. The Fed has to, at this point, you are going to have a labor market that's going to be in trouble. Inflation is not going to reaccelerate if that's the concern. And so I think it makes sense that the Fed has to cut. The problem is the market has priced all of that in aggressively. And this 2 or 3% decline, maybe 5% decline for the rest of the month, maybe it goes to 7 or 10%, like Tom Lee says. I actually think that's pretty healthy because that's the market starting to not price in an aggressive rate cycle and an aggressive Q3 earnings cycle, which means when we get both of those things, which I think are likely to happen towards the end of the year, after the election, then I think, the market more easily decides that this is a bull market, and in November, December, you see that rally. This could also be just like a random day in September, where September 3rd, the market starts out really bad, and then for the next couple of weeks, it's just flat-ish to kind of down, but you don't see multiple consecutive 2% days. Maybe that does happen. Maybe that doesn't happen again. I think it's rooted in the September jobs data, but I think the core investment thesis that you may have is, for a lot of these names, is probably not ruined because of a red day, but it is contingent upon macro data, and it is based on the Fed doing exactly what the market thinks it's going to do. Like if you're bullish Nvidia just told you they're going to do $32.5 billion in revenue. That's not something you really have to be that scared about. It's not like Nvidia's growth should be causing a growth scare. At least Nvidia has given no evidence that should be the case, outside of a delay in Blackwell, which is not that big of a deal. But if the Fed doesn't cut as aggressively as they need to cut, then you have a little bit more of fear, right? So I think a lot of this market is still contingent on the Fed, still contingent on how the jobs report plays out. But outside of that, dude, there's nothing today that happened that I saw. We'll talk about oil in a bit. That was a little bit of macro stuff. But outside of that, there's nothing really that unique that happened in the markets other than having a bloody red day. So bloody red, I turned British for the day. It's bloody red. But yeah, besides that, it's just a red day in the markets, and the rest of September is going to kind of explain to us the trajectory on how this ends up playing out. All right, we got the market close in 9 seconds. All eyes on Nvidia. Let's see how this sucker closes out to end out the first official day of September. Here we go. Tuesday, September 3rd, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, Nvidia ends 9.4% on the day, losing a couple $100 billion in market cap. but it is what it is. And this is kind of the days you got to go through if you are investing in the broader equity markets. Day one is done. Day one of September is officially done. How else did the market close? So you had Boeing close 7%. You had Tesla close 2%. S&P 500 closed 2.05%. Now at 552, bottomed at 549 on the day. We'll see what happens tomorrow, but down 552. CleanSpark down 15.6%. The NASDAQ down 3% on the day. That makes sense because Nvidia fell. Wow, look at that reversal on Palantir. Palantir was at $30.27. It closed at $30.51. Again, the demand for Palantir. My Palantir S&P 500 video is going to be coming out at 6:15. So probably like an hour after the market closed, it'll be up. But I go deeper into the thought process of Palantir getting into the S&P 500 this week on September 6th. We'll find out. But Palantir, nice hold above $30 at least today. Snowflake down about 3.35%. XLE. We'll talk about energy in a bit. That's down 2.46%. That's the energy ETF. Netflix down 3.7%. Meta down. See, this is what I'm saying. Meta down 2% is just like, it's not that serious, dude. Meta's up 40% year to date. Like that's why I'm saying the red today was bad, but it was contextually bad within Nvidia and then some other stocks here or there. It was not such a bloody red day. It was not like August 2nd or August 3rd where everything's just falling from the sky. Maybe that happens in the next few weeks, but it wasn't today. Today was Nvidia's red day. And tomorrow will be very interesting to see if buyers finally step in or if the market continues to give it a punish. Yes, S&P news is September 6th. S&P news is September 6th after hours. So 5:15, we're going to have to wait. Arnie, if you're free on Friday, let me know. I think you're in the chat. I was going to text you about this, but I'll definitely get, maybe Amir is free as well. We'll try to get a bunch of Palantir people on and at 5:15. Me and Arnie, I remember me and Arnie were on like 6 months ago. At 5:15, we were both just pressing, refreshing. And then we find out Deckers, the shoe brand, makes the S&P 500. So we were it was just anticlimactic, but hopefully we get in this time on September 6th. Coinbase down 7% on the day. Coinbase 169. That's disgusting. Oh my God. Enovix down 10%. So again, individual names took a beating like Starbucks. In a really bad red day, I would expect Starbucks to be down more. I don't think Starbucks is defensive. I don't think Starbucks is a consumer staple. Starbucks is overpriced coffee. You would imagine they take a hit if the market's pricing in a recession. They're down 2%. Like the market kind of just didn't care that much about a lot of these names, but they did care about names like Boeing, about names like Nvidia, about the semiconductor names. Those are the names that really got the brunt of the pain today. Let's take a look at the semis. So you got Micron down 8%, Dell down 4%, Lam Research down 7%, ARM down 7%. Someone who's super bearish on the markets today posted that they bought $100,000 of ARM. Like when I mean super bearish, I mean like they just keep like spamming my Twitter with like bearish arguments. And then I saw today they bought $100,000 worth of ARM. And I'm like, I don't exactly know. Maybe there's some thesis I don't understand about ARM, but I don't know if you buy ARM. I don't know if you buy fucking a couple thousand shares of ARM at these levels if you're that bearish about the market. But nonetheless, so I did see some people engaging in ARM today. ARM right here down about 7%. Marvell down 8%. TSM down 7%. Qualcomm down 7%. Broadcom down 6%. Intel down 8%. That restructuring really not going that well for the idea that they would be able to get any value out of this. SMCI is down. AMD is down. And then NVIDIA as well down 9.53%. All right, we have earnings as well. After the bell, Asana, this is the first earnings we have, is up 7%. Asana is up 7%. Okay, let me see if I can pull up these numbers and see what we got. Asana, from my understanding, is project management software. Is this the one that the co-founder of Facebook started? Is this Dustin's company? I think it is. If I'm not wrong. Or no, that's Atlassian. That's Asana. I think that's Asana. I might be wrong, but that's what we have right now. That one is up 3.4%. Let me see if I can get the earnings on this real quick and see if that's there. John says, is this just the start of a falling knife? Maybe. No one knows. Maybe ARM goes to the moon. Maybe ARM goes up 20% and the rest of the market falls. Like I think no one can predict anything until that jobs report, because that's going to determine the macro trajectory for pretty much most of these stocks, to be honest. So I think we really have to wait until that jobs report comes out. All right, let me see if I can get these numbers. So okay, we don't have Asana, we don't have GitLab, and we don't have Zscaler yet. They're not out. They're not. Oh, now Asana's down. Now we're down. Now we're down 6%. So that was fake. GitLab is up 3%. GitLab's up 4%. Oh my God, Zscaler's down 6%. All right. So, oh wow, Asana's down 8%. Holy crap. Asana's down 8%. That one's down bad. That one's down bad. John says Asana is everything to us as project managers. Asana has Jira part of it, right? Jira is a part of Asana, or is that Atlassian? I always forget those two. But that one's getting a hit right now, down 8%. Project management software, price of sales of 4.5, market cap of 3 billion. They're not profitable. Price to book of 9, shares outstanding 228 million. Never knew if there was a real big moat with companies like this. Workday, Monday.com, these are kind of competitors here. But Asana right here. Now Asana, it flipped green for a second. Now it's still down. GitLab, though, Google was supposed to buy out GitLab 2 years ago. Google was aggressively buying shares on the open market, but they never ended up doing the full acquisition. Atlassian is Jira. Okay, so that's Atlassian is Jira. It's not part of Asana. So what's the real difference between Atlassian and Asana? They're both project management softwares, right? At the end of the day, wow, it's down 10.7%. Okay, I need to get these numbers. Let me see if I can get it. Let me see. Okay, this doesn't have it yet. CNBC doesn't have it yet. We still have to talk about earnings expectations, jobs expectations, and oil expectations. So we're going to look at that. Okay, Zscaler. We have some results on Zscaler. 88 cents of earnings per share. They beat 69 cents. So they beat by 19 cents. It's called quick maths, baby. That's what I'm talking about. 88 minus 69. And then revenue 592 versus 567. The quick maths on that is 22.25. I hope that's not wrong. 25 million. So there you go. Zscaler has a beat on the top and the bottom line. They're down 5%. Something must be wrong in their guidance. GitLab is up 6%. Asana is down 11%. Okay, so nothing like that exciting in some of these names. Let me see if I can get the actual coverage right here. But yeah, nothing too crazy in their numbers. I'll try to get the actual guidance as well from the websites, and we'll see. Zscaler, how important is Zscaler as a cybersecurity company? Because I feel like they don't get talked about enough, but they're definitely one of the ones that matter, from my understanding. Their market cap, yeah, 30 billion. It's half a CrowdStrike. They're down 5% after hours, so the street did not like some of their momentum. Wait, let's look at CrowdStrike. CrowdStrike might be getting hit because of this. CrowdStrike's down a little bit after hours, and then Palo Alto probably. Palo Alto's up a little bit. Okay, so Zscaler is the one getting the brunt of the pain that we're seeing. Now it's down 7.5%. All right, now it's taking a crap. Now it's taking a crap. I'm going to put NVIDIA on the list just because I want to keep tracking NVIDIA after hours. NVIDIA right here. Wow, NVIDIA's falling another 0.5% after hours. Holy crap, dude. Goodness gracious. NVIDIA is getting demolished. Who do you think's selling? That's another question. Is a $300 billion loss of market cap on NVIDIA due to retail or institutional? It seems like, it doesn't seem like that's retail selling. That would be a little aggressive of 300 billion, unless retail got so scared that, they got out of it. Zscaler now down 6%, Asana down 12%. I would imagine there's some big whales that are taking profits today. Otherwise, I don't know exactly how you can explain the sell-off. Jose says, Amit, stop selling your shares, you whale. Dude, I believe in the NVIDIA thesis. Now, granted, I will say what I said in the morning. If you got this sucker at 50 to 70 bucks as a fund manager, and you're afraid of September, October, because again, fund managers are humans like you and me, you're probably taking some profits, dude, because there's no way you want to end up going into December. And then let's say NVIDIA has a horrible end of year, right? Let's just assume the worst. You go back to your clients who paid you a management fee to manage their money. You were lucky enough to get this sucker at 50 or 75 or even 80 bucks. And you have to tell them, yeah, we're sitting we're black in the P&L when it comes to NVIDIA. Like, that's just probably a conversation people don't want to have. So they'd rather probably take profits here after coming back from vacation than feeling afraid. Again, that's my naive hypothetical assumption of what some fund managers are thinking of, which maybe explains the collapse. Or algorithms took over today and they want to shake people out and they want to crush this bad boy to 100 before reloading before Q3. One or the other could happen, or it's just de-risking before the Fed speaks on Friday with the jobs report. But I think there's a variety of reasons you could argue for why NVIDIA is down. All right, let me see if I can get this coverage on the names that we're looking for. Let's see. Okay, well, so let's get a market update, and then while we're watching this, I'll pull up Zscaler's numbers and try to see why they're down right now.
Kind of interesting. We came just barely to the cusp of the all-time highs from July. Didn't get there, and now we've backed off. Mentioned in the last hour, where does it take us to? Right, essentially where we were August 15th. We kind of jumped higher off the August 14th level. We were in that growth scare. We had that little rebound off the lows, and then people got excited. We got confirmation the economy looked good, retail sales, Walmart earnings, all the rest of it. There's also a big gap in the chart. If you care about technical stuff, it's like 54.60 or thereabouts. That would maybe satisfy some people who think that has to be taken care of before we can resume higher. So really not that dramatic looking, although it did happen in a hurry today. Now take a look at the defensive turn under the surface of the index. This has been very pronounced for a while as yields have come down. That's been change in leadership and as the growth stocks have gotten hurt. So low volatility stocks really outperforming high beta. And look when it dates to. It dates basically to early July when we got a really good benign CPI number. People started positioning for Fed rate cuts. Maybe the soft landing was on. But you see that defensive group really piling it on. Another way of looking at this is dividend stocks. So those that have higher than average dividend yields relative to semiconductors, which of course have been the multi-year upside leaders for this market. This is here you see a year-to-date basis, the dividend ETF now just eclipsing the semiconductor ETF, which is market cap weighted and dominated by Nvidia, John.
Mike, give us a forest for the trees moment here. Back to that first chart. I mean, we've gotten what, 18, 19%, at least before today, on the S&P so far this year, which is highly unusual. Also, the VIX today up about 5 points, touching 20. Well, what does that sort of move toward 20 on the VIX mean in the context of the crazy gains, relatively speaking, that we've seen for the S&P this year?
On face value, this bump up toward 20 on the VIX means the market is just kind of clenching up a little bit in advance of some possible further volatility over the next 30 days. Now, 20 isn't a super elevated level, but it's definitely slightly above average and shows you that the market is kind of on alert at that level. It does price in well more than a 1% daily move implied in a 20 VIX. But we were also, as you see, this wild move from back in early August, that was really much more of a dislocation. The trading mechanics were getting fouled. So we're still in the routine zone in terms of both returns and pullback. You mentioned it's not a really usual type of a year-to-date gain, up 16% or so. But actually, in up years for the market, 20% gains are kind of the average. So yeah, the long-term average is more like 10%, but it's not. It's actually in an up year when we've been up this much in the first half. It's not unusual to get toward 20. We'll see if we have it in us.
Wow, so VIX is up 32% on the day. I didn't even check that out, but there you go. If you had calls on the VIX, you've done very well. Let's look at some of these earnings from Zscaler. So Zscaler is down 5%, and I'm trying to figure out why. So revenue growth 30%, just like other cybersecurity companies, growing at a very nice ARR, 592 million. Billings is up 27%, deferred revenue up 32%, GAAP net loss of 14.9 million. So they are getting closer to profitability, but they're still unprofitable. Maybe that's why the street was not too happy. And non-GAAP net income of 140 million. So CEO says, we ended a successful fiscal 2024 with Q4 results exceeding the high end of our guidance across all metrics. Customers' adoption of our Zero Trust Exchange platform is stronger than ever, and I'm thrilled to share that we have achieved a major milestone with our cloud platform, surpassing over 500 billion transactions daily. That's insane, dude. I mean, that's just that the cybersecurity ecosystem is just massive. I'm excited about the year ahead as we enter fiscal 2025 with a strong go-to-market machine and a high pace of innovation. So it has to be something around guidance. Full year fiscal revenue is up 34%. There has to be something in the guidance for next year. For the first quarter of 2025, they expect 606 million. I'm not sure what that growth looks like, but I would imagine that's not as much as the street wanted. For the full year of 2025, we expect 2.62 billion, and they did 2.1 billion. Okay, so let's do the math. I think that's 25%. 2.6 minus 2.1. 2.6 minus 2.1. That's 24% growth. Okay, so they're saying we're going to grow 24% next year. That is down from the 34% they grew this year. So you've got a 9% delta right there. Maybe that's why the street is a little upset, but they're probably sandbagging because they don't want to say they're growing that aggressively. But even if they are sandbagging, maybe you give them 28%, 29%. That's probably why I guess the street is a little upset. Just the growth is not as strong as they thought it would be this year. I That's the only argument I could say. That down 7%. Yeah, I mean, when you're growing 34% and you guide to grow down 9% less than what you were growing, or 10% less, and you're not profitable yet, maybe that's kind of what the street is upset about. I don't know enough about Zscaler to think if that's even an exciting entry point at 180. I'll do some more research, but 29 billion, price to sales of 14. It is cheaper than CrowdStrike on a price to sales basis. CrowdStrike, I think, is at 18. Yeah, so it's still a little bit cheaper. Palo Alto is at 14. Okay, so same as Palo Alto. But that might be the reason why it's down. Nvidia still down 0.5% after hours. So you got 107 on Nvidia, still taking a little bit of a downfall. GitLab is up 10.5%. Okay, so let's get the GitLab numbers and see what's going on there. Let me know if anyone owns GitLab, Asana, or Zscaler. Here's the Zscaler coverage, and then I'll pull up GitLab numbers as well.
Go back with those numbers, Steve.
Yeah, John, and the shares are falling here despite beats in the top and bottom lines. It looks like the guidance is what's really weighing things down here. But let me give you the results for their fiscal fourth quarter here. EPS was a beat, 88 cents versus 69 cents adjusted street was looking for. Revenue also a beat, 593 million, that is, versus 567.9 million they were expecting. And then, like I said, it seems to be the full year guidance really hurting the stock here. It's down about 5.5%. There for the full fiscal year of 2025, which starts the quarter we're in now, they're showing a EPS range of up to $2.87. Street wanted $3.33. That seems to be the big one there. Revenue is also at the high end of their range, kind of in line with street estimates. At the high end, they're saying 2.262 billion rather versus 2.63 billion expected for the full fiscal year. You see shares down now, John, about 6.5%. I'll send it back over to you.
All right, Steve, thank you. For more on Zscaler, we can.
So GitLab earnings are out. GitLab did. Where's the numbers? I just had them. GitLab did 15 cents of an EPS beat. Or sorry, they beat by 5 cents. The market wanted 10 cents. They did 15 cents. And revenue 182 million versus 177. GitLab, one of the only stocks that's up right now, 9.6%. I guess that's enough for the street to get excited. This stock year to date, GitLab, year to date is down 25%. Okay, so it's up a little bit after hours at that 10%, but it's not had the best year. Market cap of around 7 billion for GitLab. They are profitable. It's not like they're not making money, but stock's not been in as great of a situation. I think it's, to an extent, GitHub is like a pseudo competitor with GitLab, but Microsoft bought out GitHub for 7.5 billion. So maybe the market also is thinking that we shouldn't pay more than 7 to 10 billion for a company like GitLab, given that the acquisition for their competitor was around that same range. But stock's up about 10% after hours right now. Nvidia continuing to fall, just down a little bit more, down about 0.67% right now. So now it's looking into the 107s. On a down day like this where the market sells off into the close, historically what happens is you get a bounce the next day. That's why tomorrow's open is going to be really interesting. Do we get that bounce? Do things really, continue to get hit badly? Do buyers finally step in, or is this going to be a real bloody September? But typically when you get 3-4% down, like even 2 weeks ago when we had 3% down in the NASDAQ, or I think it was a month ago, we recovered in about 2 days, and it wasn't as aggressive. And then we had a little bit more downturn, but then it recovered. Like, it's not usually consecutive down days. And we get another 2 or 3% down on the index tomorrow, any of them. Yeah, you're going to see a little bit of pain across a lot of these equities. IWM as well. Horrible day, dude. Down 3%. I mean, you just can't defend the Russell right now. You just can't defend it. There is no rotation from large cap tech into small caps after the rate cut. Probably that'll happen. Maybe the $300 Tom Lee target is more 2025 versus 2024, but the rotation was into bonds and into value plays today. Jeremiah says, I think we see a bounce tomorrow. I think there's a chance historically it happens, but we're gonna have to see what happens tomorrow and see where it goes. Han Solo says perma bull, Tom Lee switching it up. I don't think him being bearish for September is him switching up his thesis. I think he's just being logical. Like in September, it doesn't take a rocket scientist to just look at the fact that you get a bad September. Like September is bad. And so I think it would be worse if he was like, oh, September's going to be great. It's like, dude, historically, that's just like, the market, the logic is not on your side there. So I'd rather him be more upfront and honest than then try to defend some bullish narrative that's not really bullish going into September. Here is Asana earnings, and then we'll keep going from there.
Numbers, Julia.
That's right. Asana reporting a smaller loss than anticipated, a loss of 5 cents versus the 8-cent loss that analysts have been expecting. Revenues of $179 million, pretty much in line with expectations, just $1 million ahead of expectations. But the stock is dropping, and after I was trading now down about 12% on third quarter guidance that's lighter than anticipated. The company guiding to revenue in a range of 180 to 181 million. That's below the 182 million estimated. Also forecasting a loss of 7 cents per share for the third quarter versus the estimate that analysts have been looking for of a loss of 4 cents. The other thing I just want to point out here for Asana is the company is announcing a new CFO, appointing Sonali Parekh as a new chief financial officer, and the prior CFO, Tim Wan, who's been in the role since 2017, will remain there as an advisor to support the transition. Stock now down 14%. John?
Yet another new CFO. We're seeing a lot of those. Julia Borston, thank you. Also, this reminding me of what Pure Storage CEO Charlie Giancarlo told us about the enterprise buying environment not picking up as much as he expected. That seems to be reflected in some of these technology results. Well, after the break, much.
See, the other thing about Asana, and let me know in the chat if you use this software. I mean, could AI commoditize that? Right? Like, I mean, I think I've used Asana once or twice in my life. Or maybe that was Atlassian, but like, I mean, is there a world where AI just makes project management easier and you kind of don't need this type of software? This is Asana's website, Asana project management software. I know Monday.com, there's a lot of websites that kind of do this stuff. Yeah, I don't know, dude. I mean, if you're in corporate America, I imagine this is like annoying software that you have to deal with when you're working in a team. But how many new enterprises are really buying this stuff in a world in which they're being a little bit more conscious on their costs, and maybe they're thinking there's a way to automate and get out of this stuff? Also, doesn't Microsoft have a way to kind of commoditize? Like, this is, I don't know. Asana is not really the most interesting company to me. So you would imagine that the reports or their numbers probably wouldn't be as aggressive. Google, do you think it can approach 150? Okay, so let's get an update on Google. I was going to share this. Let me share this right now. Then we'll talk about the Fed and kind of my projections on what I think is going to happen going into September 6th. But here is why Google is struggling a little bit today, and then we'll talk more about Google.
NASDAQ down 3% today, under pressure as we see all the major averages, but the NASDAQ in particular. Chips, including Nvidia, are down sharply. Nvidia was down about 7% last check, and Alphabet also down sharply. The worst of the mega caps today, down 3.5%. Let's bring in Deirdre Bosa for more. Deirdre, what can you tell us?
Well, the stock is underperforming today, Kelly, but zoom out and you can really see that it has been a laggard for months. Now down 4% today on the session. That's a lot for a company of this size. Over the last 3 months, so Alphabet shares lowered more than 9%. The rest of the Magnificent Seven have fared a lot better. We like to point out valuations as well, and here Google is also coming up short, way behind the other Mag 7. The catalyst for today's move was a Morgan Stanley note that lowered its target on Alphabet to $190 from $205. In it, they look at different remedy scenarios in the DOJ Google ruling, and they conclude that long-term uncertainty will keep the multiple lower and range-bound in the 17 to 20 times earning band. That said, the regulatory pressure, Kelly, that is only set to increase in the weeks ahead. Tomorrow, Google and the DOJ must submit a proposed schedule for those remedy proceedings and then appear for a status conference. Early next week, a second DOJ lawsuit is set to begin. Now, the most extreme scenario, a breakup of Google's business, that isn't seen as the street as likely, but investors, they're certainly getting jittery over the considerable time and resources that must be spent to fight these battles. And that's part of the reason you're seeing the stock down so much today.
So here's my thoughts on Google. If you are buying Google, you are definitely being a contrarian right now, which is not the worst thing in the world. That's how a lot of alpha is created. By the way, fear and greed index. Somehow we're at 65 on greed. I guess the fear and greed. Dude, I remember we were at like extreme fear when the market was at 565 or something. It was ridiculous. But it seems like the market is normalized now. We're at greed, and that also tends to be a sell signal. So you might have some of the sell-off explained by this. If you're buying Google, you're a contrarian because you believe in two things in the context of Google. If you're buying Google, you believe A, that LLMs are not going to commoditize their search business, which I don't think is that hard to believe in, but you are pushing against the grain when you see something like Perplexity gaining momentum and GPT gaining more momentum and Nvidia, Apple wanting to invest in OpenAI. Like, you are still saying, hey, I believe in the search business, even though I'm looking at the search business start to deteriorate. not from a business perspective, but just from like the concept of 10 blue links versus AI generated answers in front of my face, which is okay because the numbers are still phenomenal. But nonetheless, I think that is a contrarian perspective. Number two, you're also being contrarian by Google because you don't believe the DOJ is actually going to come down and put the hammer down on Google. And I don't know, dude. Like that's I guess that's why the stock is struggling, because like no one knows what the hell the DOJ is really going to do when it comes to Google. Google down 4% on the day. That's an aggressive move on a stock like Google. Nvidia right now, wow, Nvidia's down almost another 2% after hours. Holy shit, dude. That is down 11% for the day. Oh my God. That's bad. So we were talking about Google. Again, my quick take on Google is, could it go to 150? Yeah, because you're being a contrarian, hoping that the DOJ doesn't destroy Google's monopoly, which is what they have. It's literally a monopoly. I wish the DOJ wouldn't do this. I don't think Google is stifling innovation. Dude, I think there's so much competition in AI and tech. I don't think Google has some crazy monopoly that's stopping competition. I do think there are some bad sides to it, but at the end of the day, I don't really believe in how the DOJ is approaching this. But nonetheless, they're doing it. Now, if Google resolves their suit with the DOJ, we talked about that in the morning, maybe that takes away a lot of the concerns, but you would have to be buying it with that contrarian thesis that this will be resolved, and at 20 times price to earnings, which is objectively cheap, that it actually is cheap after this is all resolved. And so those are my thoughts on why anyone would buy Google right now. Nvidia is still down 1.5% after hours. This is a bloodbath on Nvidia. Nvidia gets DOJ subpoena in escalating antitrust investigation. Hold on, is that a real headline? Nvidia gets DOJ subpoena. What, bro? That is not the headline you want to see after hours on Nvidia. Yup. Literally, holy crap. I have to tweet this. Oh my God, I have to tweet this. Oh no, I have to tweet this. This is so real. Thank you for this, Flow Sounds, for putting it in the chat. Oh my God, I got to tweet this. Nvidia gets a DOJ subpoena and escalating antitrust investigation. Oh my gosh, I got to tweet. This is the life of a content creator, guys. You got to get the news out there. All right, so here we go. Here's what we're going to do. We got to tweet this out, then we'll talk about the news. This is not good. Bro. This is not good. Okay, so here's Twitter. So let's write this down. Well, hold on. First, let me just get the picture that I need to get. I'm going to take a screenshot of the picture. Is this old news? Is this? I don't know, but it's definitely hurting. Dude, this is Lena Khan. Lena Khan's coming at this. Oh, let me actually, I'm just going to quote tweet the tweet I did before I went live. Yeah, that makes more sense. That's not good, dude. That's not good. Okay, so I'm going to try to get some updates on what this means. A DOJ subpoena. Subpoena sounds pretty cool, dude. I've never been subpoenaed, but yeah, the word itself sounds pretty cool. Nvidia gets DOJ subpoena and escalating antitrust investigation. This investigation has been going on for a while. I mean, Nvidia tried to buy out ARM a long time ago, and they got hit with antitrust. So it doesn't look like this is like, I mean, the headline looks bad, but it doesn't look like this is the worst news ever, because obviously Nvidia has been dealing with DOJ stuff for a while. But this is, I mean, if this turns into a thing, like a thingy thing, like a bad thingy thing, then yeah, this is not going to be fun for Nvidia right now. Let me take this screenshot right here on Nvidia. So we're at 106 after hours. Okay, so here we go. Down one, damn, it's down another 2% on this shit. It's down another 2% just on this. Exactly, old news, just noise. It kind of feels noise, but like, why is it reacting to this? Or maybe it's not reacting to this, but it's reacting to something else. 1.65%. It definitely came out just now. It's on the Bloomberg terminal. Everyone's reporting it. It's not fake news, but it does kind of feel like it's something from an investigation that happened a while ago. Wow, dude. Down 2% after hours after being down 9.5% during the day. All right, so that's what we got. I'm trying to see if there's any more coverage on this. Is Nancy selling? No, I don't think Nancy's selling. I'm trying to get some coverage on this. What does this mean, this DOJ investigation? Let's see if we have any other coverage. It's just the headline. No one's really giving us any crazy analysis right now. It's pretty much just the headline. Would this actually affect, would they have to like give up their intellectual property on the GPUs? There's no way, dude. The DOJ sent subpoenas to Nvidia and other companies that seeks evidence that the chip maker violated antitrust laws. Can't Nvidia just pay a parking ticket and get out of this? Nvidia has been issued a subpoena by the U.S. Department of Justice as part of an intensifying antitrust. It's recovering a little bit after hours, getting a little bit of a green candle, but it was down about 2%. The U.S. Department of Justice has just sent Nvidia a subpoena related to its antitrust investigation. Bloomberg just reported it, so it's definitely official. But they sent it to other AI companies, not just Nvidia, apparently. That's what it looks like. Goodness, dude. That's down. Get Kris on. Is Kris in the chat? Kris? All right, Kris. I'm giving you a phone call, Kris. I'm giving you a phone call, Mr. Kris Patel. Let's see what you've got to say about this Nvidia sell-off. Oh, no, Kris said, no, I'm working. Okay, Kris, we'll talk to you in the morning. I know some of you were pretty mean to Kris in the chat over the past couple of weeks. A little aggressive to my boy Kris. So I think he's got some things to say now after Nvidia came down. Kris buying puts. No, Kris is not short Nvidia. Kris doesn't have any puts on Nvidia, but he definitely has been a bit skeptical of Nvidia's momentum. So this DOJ thing, dude, it really does not seem like that big of a deal. But for some reason, the street's acting like it's a big deal. Now it's recovering a little bit after hours, but still down another 1%. Again, remember, a 1% move on Nvidia. It's a $2.65 trillion company. That's a decent amount. Like that's not 1% on like Palantir or 1% on SoFi or Robinhood. That's like a bad move, you know? So every 1% still hurts Nvidia pretty badly. I agree with the earlier comment that this is just a government shakedown. Government has to get their piece or nobody gets to play. Yeah, I definitely think it's a government shakedown. I don't think they're actually going to... Dude, Nvidia is creating so much prosperity, so much GDP growth, so much, economic... so much economic wealth for other companies that are benefiting off of this AI, GPU, industrial revolution, whatever you want to call it. It is asinine to me to say Nvidia is the one we need to go after when the entire economy and the future growth prospects of the economy based on how investors are conceptualizing the next S-curve of growth, which is AI, is contingent upon Nvidia. Like this is literally America shooting themselves in the foot and going after one of the most important companies in the world. Like, let Jensen just do his thing. Like, don't interrupt him, bro. Like, let him just work. Same thing with Google. Let them just do their thing versus trying to like, kick them and try to prove a lesson. Okay, so I got a Bloomberg tweet. Nvidia received a DOJ subpoena as the U.S. Justice Department seeks evidence that the chip maker violated antitrust laws. This is an escalation of the department's investigation of Nvidia's dominance in AI. And that's the extent of what we have right now. So Bloomberg doesn't really even have that much analysis other than the fact that the DOJ is mad at Nvidia. That's it. Bloomberg really doesn't have anything else besides that. Yeah, that's it. Bloomberg's literally like, hey, they're mad at Nvidia. That's it. It's like a 2-minute article. It's not even that substantive. Clove just shot up by 30%. All right, so sell Nvidia, buy Clover Health. Amazing. Why is Clover up 26%? This has to be a bug, dude. Why the hell is Clover up 26%? Was Chamath right this whole time? Was Chamath right? Chamath, it was always going to be Clover Healthcare. June says we were slapping the hands that feed us, dude. This is Roman Empire stuff. This is not the stuff you want to see. SMCI stayed green all day because it sold off so aggressively last week that I think people, took a gander at SMCI, but it's up 1%. It's not like it was aggressively up, but it is impressive, dude. Nvidia down 10%, SMCI green. That is impressive. Usually SMCI falls with it. But I think last week's sell-off was just too intense. Wow, Nvidia now down 1.54. There's no green candles here. It was recovering a little bit. Now it's continuing to just get hit. Continuing to get hit. Watch Chamath come back with vengeance, dude. That'd be hilarious. That would be hilarious. Oh my gosh. Oh my gosh. Oh my gosh. Oh my gosh. Any thoughts on SoFi dip today? No thoughts on it. It's just red market. SoFi is going to get hit down 6%. They need rate cuts. Rate cuts can't come fast enough. But we need the jobs data to be good for the rate cuts to even mean anything. Real quick, let me show this as well. I said I was going to show this. Let me show this right now. It's conducive with what we're expecting on Friday. So there's 3 scenarios on Friday. The best scenario for jobs growth, and this implicates SoFi, Nvidia, CleanSpark, et cetera, because it's about the macro trajectory. Best scenario, 150,000 jobs, inflation comes down, GDP at 2.5% plus, Fed cuts at 25 bips, unemployment steady at 4.3 or goes down to 4.2. This is what you're looking for. This right here. I'm going to put this tweet in the chat if you want to save this tweet or bookmark it. This is what you need to look for from my perception going into what I think is going to happen in September 6th from the macro data. Decent is we get jobs growth at 120. Unemployment is flat. Whispers of the Fed will do 50 basis points to cool down a weakening labor market. But the market doesn't care too much because inflation is coming down fast enough. Job growth is decent. This scenario will be volatile, but this scenario is not a recession. The worst scenario is we get job growth at 110,000. Remember, July was about 114,000. That's why August 2nd, the market flipped out. Unemployment ticks up to 4.4%. That's bad. Now the Fed is definitely going to cut by 50 bips, but that's an emergency cut. That's not a really a welcoming cut. Now earnings growth gets into question. Can Nvidia keep growing if the market's pricing into a recession? Market ends up thinking a recession is a default thing that's going to happen. We get a massive crash. Investors will rotate into value plays, bonds, or cash that day on Friday. So literally Friday is going to be one of these scenarios, I think. I don't think it's anything other than these 3 scenarios. There's one other thing that could happen on Friday where we add way too many jobs and then the market's like, wait, are we going to get inflation to reaccelerate? I don't think that's a concern. I think inflation is steadily falling off a cliff, which means even if we add 200,000 jobs, I think good news would be good news. I don't think that's going to be contrarian to the inflation acceleration narrative. But my hope is that we get the best scenario, which is strong job growth, inflation comes down, GDP growth at 2.5, and the Fed cuts by 25 bips. If that doesn't happen, Friday is going to be tough. So it's going to be really, really important to see what happens on Friday. If Bitcoin hits 100,000, what's going to happen to CleanSpark? Honestly, not sure. I think the people that I've talked to that are in the miners, they think CleanSpark's closer to $30 if Bitcoin hits 100,000. But at this point, dude, like, I don't think anyone can think Bitcoin's hitting 100,000 if the market's... Bitcoin is not contrary to the market. And anyone in Bitcoin knows that. Bitcoin performs with growth stocks. It's not a hedge against inflation. It's a hedge maybe against the long-term impacts of monetary policy and money printing. But in the short term, you know, if you're making a tactical move on it or a tactical move on a proxy, it is purely based on what happens with growth stocks. So Bitcoin right here, I don't even think we can talk about 100,000 until we get a good jobs report and inflation continues to move its way down. Nvidia is still struggling, man. It's not getting a green candle. No one's stepping in after hours to buy. Now it's 8 cents away from $105. Like, the market's just letting this one slowly fall off a cliff and really not get any momentum. Really not get any momentum at all. Let me see if CNBC has any coverage on this Bloomberg article about Nvidia. Kind of seems like a nothing burger the more I read this headline, but if the market's afraid about Google, then the market's definitely going to be afraid about Nvidia, I would imagine. But yeah, I do agree. The DOJ is being a bit ridiculous here, dude. You got to let companies be companies and let them do what they need to do. I mean, if you're going to prosecute every single company for just being a company and being strong, I mean, you could say Nvidia is a monopoly right now, but it took them 30 years to become a monopoly. Like, we're gonna punish them after they worked their asses off for 30 years to get to this level. Like, that's insane, especially when they're controlling the majority of the economy right now. Okay, let's see what we got. So let me see. Do we have any coverage right here on Nvidia? No, not really. Market's not looking at that. Oh yeah, we got a little bit. All right, here we go. Let's see what they're saying.
Reporting that Nvidia has received a Department of Justice subpoena in an escalating antitrust investigation. We know there's been growing concerns that given Nvidia's dominance in artificial intelligence chips, that it could potentially invite antitrust concerns and therefore regulatory interest. I would also point out that the DOJ antitrust chief, Jonathan Cantor, joined us on CNBC just a month ago. And at that time, we pressed him on how he was looking at the semiconductor industry. And he had said at that time that he was thinking about AI chip competition. We have reached out to NVIDIA. More when we get it. John?
All right, that stock down about 1.5% in overtime. Seema, thanks. Let's get back to Mike Sand.
See, CNBC doesn't have any coverage either. Oh, they're like, okay, so that's the headline. Thanks for letting us know. Like, no one knows what the fuck this means, dude. Subpoena for violating potential antitrust laws. Like, goodness gracious, dude. Goodness freaking gracious. This is a $3 trillion company that has created so much wealth and prosperity, and we're going to go after them. Danielle, I might steal your tweet. I might have to tweet this. They better not come at NVIDIA too hard. It'll be less unrealized gains to tax. That is hilarious, dude. This is a joke. This has got to be a joke. This has to be a fucking joke, bro. Is this good for Intel? No, there's no way this is good for Intel. Well, Intel has its own issues, but NVIDIA's downfall is not bullish for NVIDIA or for Intel. Wow, it's down 2%. There you go, 105. You want a thriving NVIDIA, a thriving AMD, a thriving TSMC for Intel to also be grouped into those names. Now, if TSMC falls a little bit in its dominance, that's good for Intel. But at the end of the day, Intel is still selling to a lot of these same customers, like an NVIDIA, like an AMD, like an ASML. So it's all part of the supply chain ecosystem for these chips. I don't think NVIDIA falling helps Intel. After hours, where's Intel? Is Intel up a little bit? Intel's up a little bit right now. Now, granted, Intel was down 9% of the day, so it's probably getting a little sympathy right there. Is TSM down on this news? Yeah, well, that's why Intel's up, because TSM is down. So the NVIDIA downfall might be bad for TSM because NVIDIA is their biggest client. That might be interpreted as bullish for Intel, even though I think that chain of logic is kind of stupid. But NVIDIA right here continuing to drop at 105. I don't think NVIDIA dropping is what we want to see for Intel to recover. I mean, Intel has a lot of their own operational stuff to do, but it's down. It is continuing to fall right now. Remember the whole point, the whole bullish thesis for Intel, I think people forget about this. The idea is Intel will create a foundry business to make their own fab and their own chips, and that will create more diversified spend from hyperscalers, Nvidia, etc., that don't have to rely on TSMC, because the whole idea is, well, if China invades Taiwan, et cetera, like TSM is way too volatile and it's way too contingent upon the global economy. But Intel hasn't been able to prove they can do that. They haven't been able to prove that's profitable, and they haven't been able to get the rest of the business to start ramping up in terms of their AI PC chips to make investors think that the foundry business is going to be successful. That's why they're bringing in all these investment bankers, all these suits, to try to consult with them on figuring out what to do. So I think that's detached from NVIDIA. It's more attached to TSM. But NVIDIA going down definitely doesn't help the broader semiconductor ecosystem. So NVIDIA now is down 2.1%, 105.65. 105.65 on NVIDIA. Is Palantir down after hours? Is this hurting Palantir? Palantir's down another 1%. Yeah, I would imagine. Where's Robinhood? All these stocks are probably getting hit. Robinhood's okay. Robinhood 1934. Palantir's getting hit. All the AI stocks. Where's the semis names? Yeah, look at that. Micron down another 1%. Dell's down 0.5%. Supermicro's down 1%. AMD, interestingly, is up after hours. So maybe, I mean, AMD and NVIDIA do compete. It's just NVIDIA's on a whole different, level when it comes to their growth. So the overlapping in which they compete, I don't think is that decisive for the market to be like, well, we'll sell off NVIDIA, we'll buy AMD. But I guess that's what the market's doing right now. It's up a little bit after hours. On Semiconductor is down, ASML is down, Broadcom is down, Qualcomm is down, TSM is down. That's the one that's hurting a lot, which is benefiting Intel right now, up about 0.25%. Intel and AMD are the only ones that are up. Everything else, which is like 1,000% contingent on NVIDIA, Intel and AMD are a little bit more removed from the broader NVIDIA landscape. They're up a little bit, but everything else is taking a shit. ARM is down 1%, Marvell's down 0.4%, TSM's down a third, Qualcomm's down 1%, and then Broadcom's down 0.5%. Dell also down 0.5% right now as well. Oh my gosh, this is red. Zscaler now down 11%. Holy crap, dude. I mean, look, they did reduce guidance by 10%. I mean, that's bad. That's not good. So I could understand why they're down, but I don't know if it deserves to be down 10% of that. I don't know the company too well, but in general, I guess that's like Palantir saying, hey, we were growing at 35%. Now we're going to grow 25% next year. If you're not going off a big base, which, Zscaler, a $30 billion company, it's not like, NVIDIA's base or Google's base or anything like that. That is a slowdown in growth, which is not good. Now, the question is, why are they slowing down in growth? Because all these, NVIDIA now down 2.5%, all these cybersecurity companies said, hey, CrowdStrike's demise is our opportunity. Well, I mean, they're not raising their guidance. So obviously they're not massively growing because CrowdStrike fell. So I am interested in listening to their earnings call and seeing what they have to say. CrowdStrike down just a little bit after hours. as well. Palantir now $30.11. Tesla is down at 209, and Nvidia continues to fall 105.25. 105.25. There it is, folks. A red day. So I got 969 votes on the poll. 66% of you said no, you did not buy the Nvidia dip. 34% said yes. So the far majority of you said you were waiting to buy this dip, which is fair. I think that is fair. 105 on Nvidia is kind of crazy though, bro. Like this stock was at 130 last week. Now it's at 105 after hours. If it dips below 100, now you're going to have to see if buyers finally step in. And then if it gets to 90, you have to see if buyers step in. The funny thing is though, the further Nvidia falls, the more attractive their price to earnings looks. Jensen already told you what they're going to do. They're going to do 33 to, he said 32.5, but you would imagine 33 to 33.5 billion next quarter in revenue. Unless the market thinks that's going to slow down going into Q4, which is when Blackwell starts, which I would imagine is closer to 36 billion in revenue. And then eventually you get to the point where Nvidia is doing 50 billion in revenue over the next year. Or at least, 35, $40 billion in revenue, right? That's how you get to that 160, $170 billion by 2025, which is what most analysts project that they'll do about 160 to 180 billion in 2025. The stock becomes just cheaper and cheaper as it falls or stays flat. If you believe they're going to put up that earnings growth and that revenue growth in 2025. Now, if you don't think they're going to do it, then it's the most overvalued company in the history of mankind. But if you think they're going to put up $4 to $5 of EPS and 160 to 180 billion in revenue, it trades at a really exciting, 25 PE, 30 PE, the more it drops. But the question is, will investors let it get to those levels and stay at those levels as we get into Q3? Kris just picked up some at 105.26. Nvidia's near 100 right now, correct. Mitt, I think the part of Intel's rally Friday had to do with the new strategy that would shelve the foundry portion of their business. Will be interesting to see how Nvidia affects Intel's upcoming presentation. Good point. This is something I forgot to mention, so thank you for that. If Intel's, that might be another reason why the stock is up a little bit after hours. If Intel's foundry business is scrapped, meaning the whole big growth curve the street was thinking about is not going to happen. Intel was down 8% on the day. Then maybe they're just going to focus on AI chips for the PC, which is their biggest market. And they go all in on that. And maybe they invest some of the money they were doing in the foundry business. They put it somewhere else. And that actually, leads investors to be excited. That's not bullish geopolitically, because then if China invades Taiwan, there is literally nothing as an alternative to TSMC. But maybe that is bullish in general for shareholders. The problem there from that perspective is like, what are you buying Intel for at that point? Because like AMD and their AI chips, you could argue is way more exciting than Intel, especially if we're going through a PC upgrade cycle. Max, Apple has developed their own chips. Intel has really not used that much anymore. So then what's the point? At a $90 billion valuation, what are you really buying Intel for? But I'm assuming the investment bankers are coming up with some type of thesis and they're going to present it to the street to get the street more excited. Palantir's under 30. All right, there you go. Palantir under 30. Dolores just at 30, hit 29.98. So Palantir's falling with Nvidia. Make no mistake about it. Nvidia is taking down the broader market. Where's the NASDAQ after hours? Down a 0.5%. And then SPY is down about a 0.5% as well. So the indices are taking a little bit of a hit. IWM after hours is flat. Palantir 29.97, 29.95. There you go. There's your Palantir dip, or at least the beginning of a potential dip. And Nvidia continuing, 20 cents away from 104. It is officially down 9.53 plus 2.45. 9 plus 2 is 11. 11 plus, it's 11.9%. 11.97%. So call it 12% on the day. Nvidia is down. There you go. There you go. As Nvidia continues to come down. If Jensen expects Blackwell to have high demand, why did he sell 576 million shares? Okay, so in shares. I think people have to remember Jensen sold 0.01% of his overall holdings. His holdings is worth about 4% of Nvidia. So I know it sounds like a lot when he sold $576 million. Jensen Huang is worth $109 billion. Today, he's worth 10% less. So call it $90 billion. But you get my point, right? He's worth 90 to 100 billion bucks. He sold $500 million. Now, this is someone who's run the company for a very long time. He's going to take some profits. A lot of these sales are scheduled as well. But I don't think the insider selling is what we can look to for the reason why NVIDIA is down. I mean, at the end of the day, it's just he's worth a lot. The stake is worth a lot, and it's a very small fraction of his overall stake. Now, if you want to say, hey, $576 million is still too much out of $109 billion, then yeah, you can interpret that as bearish. I just think, a lot of insiders sell at the end of the day, and that's not something that you can necessarily critique them for. Also, the stock's up almost 200% year to date. Like, would you not sell? Like at the end of the day, people are going to take their profits. The question is, do you think the taking of the profits takes away from the growth story? And if you think that's the case, then sure. But outside of his selling, the broader growth story from the data we looked at doesn't seem to be hurt. Now, again, if you don't like Nvidia, I think the reason you don't like Nvidia is not because they're not growing or not because you don't think they're going to keep growing, is because you just don't like the valuation at a 40 PE. If that's the case, then that's fine. That's people have disagreements on valuations. But I think people saying he's selling and accusing him of fraud or accounting errors or like it's a bubble, those are where I think the analysis is not as strong when we're analyzing Nvidia. Jensen needed a pedicure, correct. Here's a question. If you owned a nail salon and Jensen Huang walked in and you have a fat ass stake in Nvidia, is he waiting 10 minutes before he gets his pedicure? Because I don't care who you are, you're moving for Jensen Huang. I mean, like if I own a coffee shop and I own a crap ton of Palantir and Carp walks in, I'm sorry, bro. Like we're going to make sure we serve Carp like this. We're going to have to do that. Nonetheless, I do think Nvidia right here being down is not really because of Jensen. It's a lot of other reasons why it's taken a downturn. Dougie bought some TQQQ. Well, it's going to be interesting, man. TQQQ was down 6% on the day. Down 9% of the day. This is why these instruments are trading vehicles, not investments, because they're just so volatile. Same thing with the leverage ETFs. To me, they're more trading instruments than actual things you want to buy and hold. But TQQQ down 9% on the day. Does that turn into down 18% tomorrow? Does it have another 9% day if the NASDAQ falls 3%? Or do people step in and they say, hey, 460 on the NASDAQ is where I get excited. 450, I think, is one of those specific support levels. 420 is the August 5th low. So I guess we're going to have to see as it falls, if it continues to fall, where the buyers step in on those levels. Let's get another perspective on what's going on in the markets and kind of how people are thinking of it. Let me pull up this clip and then we'll keep going from there and continue to talk. So let me pull up these two clips and then we'll keep going. Nvidia right here after hours. Where is Nvidia now? Is Nvidia continuing to fall? 105.4. All right, so it's still holding that 105 level, but trying to find where it balances. All right, let's take a listen to this, and then we'll keep going.
Invesco and Shannon Sakosha of NB Private Wealth. It's good to see both of you. Brian, you've been sitting here listening to Adam. You want to agree, disagree? What do you think about where we are here as we start September?
Well, I think where we both agree is we've seen signs, leading indicators of the economy showing that things are going to be slowing here a bit. And so it makes sense to be a little bit more defensive tactically in a slowdown. But I actually would suggest that we're starting to move towards better policy clarity than we've had in quite a while. That, if you think not that long ago, we were dealing with 9.5% inflation, the Fed raising rates multiple times. We're now on the cusp of the easing cycle. Now, personally, if I was running the central bank, I would have eased earlier than this. So the risk now is really on the growth side. It's not on the inflation side. The risk is, does this economy remain resilient through this? Right now, basically everything you're seeing with regards to leading indicators, recession warning signs are not flashing. Leading indicators of the economy are slowing a bit, not collapsing. So it suggests a fairly resilient economy, but a slowdown where things get where investors get a bit more tactical.
So what would you would have done an insurance cut in July?
I would have.
To head off some of the things that you feel?
To your earlier point, we're sitting at a 5.25 Fed funds rate when their preferred measure of inflation is 2.5%, when the 10-year Treasury is below 4. Right? It doesn't make a lot of sense to be this tight. Now, of course, they're still focusing on an environment, you know, a year or two ago where inflation was significantly hot, but that was really the byproduct of a bizarre environment in which we shut down the global economy and didn't have enough stuff on the shelves for the.
I agree. And I think that's why the Fed is way too tight, which is why we're probably going to get cut. But September 6th is going to determine if the cut is a good cut or a cut because we're scared about the job market.
First time in a while. So inflation back in the comfort zone, and the economy slowing, unemployment rates picking up a bit. Yeah, I would have been easing.
So, Shan, I want to, I guess, jump off with you with a debate over where to be in this market, okay? Because Adam lays out pretty clearly his view about where he thinks you maybe should be and where he thinks you shouldn't. He said, I don't understand the small caps idea. You've been arguing for broadening areas of the market. Maybe small caps are part of that too. So are you having second thoughts about that? Help us.
No, we're not. I think, you know, Scott, you and I have had this conversation very frequently in terms of our view that we did think that earning expectations for mega cap tech and communication services, that they were a bit lofty. And, you know, whether you want to look at valuation, which is certainly lofty, but I think Adam makes a good point in terms of the vulnerability of the earnings estimates for those companies. Just they look more vulnerable than other parts of the market. We can talk about some of the sectors, you know, this barbell that I think a lot of people have put on in their portfolio, whether that's, you know, you've got some semis on one side and you've got some healthcare, utilities, REITs on the other side. And in the middle are a couple of those sectors that really no one's paying much attention to, right? Particularly areas like energy, materials, and industrials is one that's a hot topic. And I know Adam and I have had conversations about this over the years in terms of what the opportunity is in industrials. We like industrials, but really you're seeing a lot of barbelling. And that's because investors are reticent, they're hesitant not to have those positions in mega cap tech because every time we get a sell-off, there's a lot of volume that comes back into those names. We see that hockey stick, that sharp rebound, and people don't want to miss that. But on the flip side, they kind of know that some of these estimates, they feel a little bit toppy right now. And so I think it comes back to really, Scott, like, what do you think is happening in the environment? Do you think this kind of noisy normalization, a term that 22V Research had in a piece this week, do you think that noisy normalization is enough to make you feel comfortable being broadly allocated, that this broadening out, this cyclical rebound is going to continue, albeit perhaps at a lower growth rate? Or do you need to really batten down the hatches in this environment and go completely over to the side of defensives? I would argue that some of those sectors that have been historically defensive, however, have run up based on other megatrends like AI over the course of the last year. So it's difficult to kind of to execute a true defensive trade in this market. And I think that's why you're starting to see some of this whipsawing as we get back into higher volume, people back from the holidays.
So that I think that's a really interesting question. By the way, $1 trillion of wealth was wiped out of the market today. What do you think is a defensive play? That's a question. I'm curious what people have to say. What do you think is a defensive play in this market? There's a variety of different defensives, right? You could say healthcare is a defensive. You could say McDonald's is a defensive because if we get into recession, people will still buy McDonald's. You could say Meta is a defensive because advertising is not going to stop and election advertising is going up. You could say Eli Lilly maybe is defensive or JP Morgan. What stock do you think is defensive? Meaning if we get a downturn, that stock will not go down as much as everything else, or will actually go up if things get that bad? Because as she said, I think it's an important question. Some of the traditional defensive names aren't actually that defensive. Large cap tech is not that defensive anymore because expectations are higher, even though their cash flows are amazing. You could argue maybe Berkshire Hathaway is not as defensive as it was before, and Berkshire Hathaway's already run up 25% this year. So you kind of got to ask yourself, how much more room does it have to keep going? Like, so these are questions that I think are important to figure out if you're trying to discover where is the defense here. Kris set to call him. All right, here we go. Let's call Kris and let's get his thoughts on what's going on in the market. Some of you guys say Walmart, Costco. See, if Costco was not trading at 54 PE, I would say that's a little bit more defensive, but that's a bit aggressive. Kris, what's up? You're on the market close.
What's up? What's up, man? Yeah, I heard your defensive thing. I'll take a break real quick and just basically outlining some really good defensive plays. This way, people can't say I didn't give them something.
But before you give me that, I want to get your take on Nvidia real quick. What is your reaction to what happened today and the broader sell-off in general of the market?
I mean, a lot of this is just jitters, but then there's also a part of it. People are just waking up to valuations, right? I mean, Nvidia had nosebleed valuations going into its earnings, and the thing is, it didn't live up to those high expectations. So now the narrative has shifted, and the thing is, now they're going to have to prove themselves in the next quarter. If they can't prove themselves next quarter, then they're going to have to do it again in the quarter after that. And if they never get to the point where, you know, they're living up to these lofty expectations, they're always going to underperform, you know. And a lot of the market isn't just about like making money. It's also about sentiment. And the thing is, like, if the sentiment goes a little too far off the rails with everyone just saying, "Oh, Nvidia is going to 200, it's going to 300," and I'm sitting back, I'm like, wait, you think this thing is going to be a $6 trillion company because of what? You know? And the thing is, you can already see the quarter-over-quarter growth is slowing down. So it's kind of, it's not one of those things that you want to fight. Like, don't fight the trend. And the trend is that, you know, the terminal rate on Nvidia is not going to be growing at 100% for the next 5 years. Hell, I don't even think it's going to grow more than 10% over the next 5 years on a annualized basis. Because, like, look at how much money is already being pumped into this thing. And semiconductors themselves tend to be a cyclical business. So it's just, from a risk perspective, it made no sense to be like super long at like 125, 130,
right,
when the risk was more to the downside or a flatness than an upside. Like, Nvidia would have to do extremely well to live up to those lofty expectations. So it's more expectations.
Do you think buyers step in down 12% of the day tomorrow, or the pain continues?
You could always see a dead cat bounce. You know, it's nothing unusual. The only thing is, the perfect example that I would give is something like Tesla. Like, if you go to 2021, you know, Tesla at one point was trading at almost like a $340 per share, or almost 400, something like that. It was like super high up there. And it doesn't mean that Tesla's a bad company by any means now that it hasn't, you know, like, performed that well. It's still a great company. It's just that the valuation got so high, the expectations got run up so high, and now Tesla has to just, for the next 4 years, had to kind of prove itself. And now Tesla's in a worse position, because now you're starting to see margins compress. You're starting to see net income declining. And I think something very similar is going to happen to Nvidia as well, where the expectations are kind of like being reset. And if there is any weakness in Nvidia's growth story, it's going to get repriced much lower, probably closer to what a traditional semiconductor is priced at. The other thing is, semiconductors in general, because of this AI trend, have gotten really, really overvalued. Like, I think I showed that chart last time, that the forward PE on semiconductors was close to 26, 27, which makes no sense, because that's like a historical high in earnings multiples on a industry that's cyclical, you know. So I would say that we really needed stuff like something like this to happen in the market to bring some rationality into it. And we'll see where things go.
Okay, so then defensives. What to you is the defensive name over the next 4 or 5 months?
All right, so imagine right now, like, you as a person, there are certain things that you're going to need to just live a normal day-to-day life. I mean, that's the general consumer, right? So number one, you're going to need electricity. So, you know, utilities, like, you can't stop paying for your utilities. There's no changing electricity. I mean, maybe use a little bit less electricity. I don't know. But for the most part, electricity is defensive. So utility, cell phones. So you're also going to have people that are not really going to give up their cell phones. So you have communications services like that, you know, like actual communication services like telecom. So you got AT&T, Verizon, and T-Mobile. It's not like there's any competition there. It's not like people can switch off of it. It's not like people can not use it anymore. So that's another place to look. And what's interesting is if you look at something like Verizon especially, Verizon has a pretty good covered dividend. And it's paying almost like a 6.5% dividend that's still growing. And at the same time, they have a ton of debt on the balance sheet, which ended up hurting their valuation when rates were going higher. But it's kind of like almost like a tailwind when rates are going down, because now the capital that you use to finance all the construction of all these lines and everything else, it's going to end up benefiting you. Because now, before where the debt was a vulnerability, now the interest rates are coming down. The debt is actually not, it's easier to service. So you're in a place right now where, number one, Verizon is yielding a good qualified dividend. By the way, people need to understand what qualified dividend versus a non-qualified. And Verizon is giving you a qualified dividend at almost 6.5, I think 6.25 based on today's prices. That's a growing dividend. So people are going to be chasing this thing, and they're going to be chasing yield, because eventually when the Fed starts to cut interest rates, where are you going to go get your return? Right now people are, especially retirees, like baby boomers, they're sitting on more money than they know what to do with. They can sit in the bank. My father-in-law right now, he's got a CD out for like 5%. I told him, when does your CD expire? He's like, in 2 months. I said, let's lock in some of those rates for the next 10 years by buying into some, corporate debt. It might not be qualified, but you're going to do really well on it, because you're going to be getting this continuous income coming in, and you're not going to be relying on the CD rates that are going down, So these are the kinds of things that you're going to see this rotation happen. So, I would say that I would also look at other industries that have put on a lot of debt, but their cash flows are really strong, which means that now, number one, the debt is going to be easier to service, because of the cash flows that they have are going to go towards interest payments, but the interest payments are going to go down as the Fed starts to cut interest rates. And that means that as that deleveraging cycle happens, value is going to transfer from bondholders to shareholders. So that's another thing to look at. And last but not least, and this is something that retail investors don't even know about, don't look at, and they really should, which is preferred equities, because preferred equities give you a lot of liquidity that bonds typically don't. I don't really talk about bonds with retail investors, because the buying and selling of bonds is a lot more complicated. But for a regular retail investor, you can actually just go into most major brokerages and buy some good preferred equity. And believe it or not, there's actually preferred equity right now in some regional banks that's like a pretty good yield, and it's a qualified interest payment. Like, imagine right now you're getting a 7-8% coupon, and it's a qualified payment that you're getting. And then also the preferred equity is trading way below par, which means that when interest rates get cut, not only are people going to be buying this thing up, but you're going to get the capital appreciation for the preferred equity going back to par again, but then you'll also be getting those qualified interest payments, and basically you're chilling, and you get them on a quarterly basis for the most part. Maybe, like I said, every one of those things you have to look at. There's plenty of new issuances out right now that are yielding almost equity-like returns. You just have to know where to look in this market, and you could do extremely well.
Do you think the jobs data on Friday is going to determine the rest of the year for the market?
I mean, it'll give us a sense of where we're headed, but I genuinely believe that we're headed into a lot of disinflationary and possibly even deflationary scenario going forward. I mean, look at oil right now. Oil, in my opinion, is the greatest barometer to figure out in the short to medium term which direction inflation is going to go, right? Because it's an immediate impact. If oil prices are down, gas prices are down, and now the cost of, for the consumer, they feel it right away. Like you were talking about it this morning, where you're like, oh, I never saw $2 in New Jersey for like the longest time. Well, there you go. You feel better now, because now inflation is coming down a little bit, right? So I would say we're getting to the point where disinflation is going to start coming in into like the general market. I just wouldn't expect like prices to like go back to like 2020 levels. Like I don't think that that's a possibility because that's deflation, and deflation is like really, really bad. So I don't think that's the case. I also think we should all be watching out for real estate. I think a lot of inventory is going to come on the market, and as the Fed cuts interest rates, normally what happens is when the Fed cuts interest rates, housing supply tends to shrink because what ends up happening is there's buyers will step in. Like every time interest rates get cut, buyers are like, oh, let me buy. This time around, when interest rates get cut, you might actually see a lot of people who were holding off on purchasing their next property. They're going to put their stuff on the market to sell. And I think there's going to be a huge inventory build. And you're kind of already seeing it in certain parts of the country.
So hold on. You think rate cuts will increase supply, aka decrease prices?
Yes. Yeah. It's
but a lot of people
like
are saying that when you cut rates, people will start selling their homes and start buying more homes. So it's gonna like not have the effect of decreasing the cost.
Nah, I think it's the opposite, man. I mean, it's a little weird because the same thing happened with interest rates going up. I honestly, when I first looked at interest rates going higher, I thought, the price of homes are definitely going to come down now, right? But what ended up happening was you had an inventory situation happen where people were just like, oh, they're sitting on 3% mortgages, so they're not exactly in the zone to buy a new house. They're like, the opportunity cost of leaving a 3% mortgage and taking on a 6.5%, 7% mortgage is really stupid. So I'll just stay where I'm at. The thing is, now that unwinding is happening, where now people, as interest rates come down, it's easier to give up that 3% mortgage, right? Especially if it's something that's detrimental to your personal life and you've been dealing with this. As an example, I know people right now, they're commuting almost an hour and a half and still living in the same place. The reason why they're like, I don't want to give up my 3% mortgage.
Yeah.
You know?
Yeah.
Because now if they buy a house near their workplace or their new career, then they're gonna have to, deal with 6.5%. But like, let's say right now the interest rates come down to 4.5, 5, well, probably for 4. Now they don't have to deal with that as much, so they'll be like, okay, whatever, I'll give up my 3.5% mortgage and, take on a 4.5 one. And I think there's a lot of inventory that's been kind of like held back. That's going to start to come into the market now. You also had a lot of people putting their homes up for rent, that basically they were like, okay, look, I need to move, but at the same time, I have this property. What am I going to do with it? And so they would rent it out. But now the market has kind of flipped a little bit, where the rents are starting to actually come down in certain parts where there's so much inventory. It's actually not cash flowing anymore. And if it's not cash flowing, you kind of want to sell and get a good price, before the market crashes. So that's another thing. Airbnb, by the way, you can already see weakness with a lot of people like kind of turning their head away from Airbnb. So you had this giant surge of people during COVID and post-COVID going to a lot of Airbnbs. And so there was a surge of people buying these properties to turn them into Airbnb properties. And now you're starting to see the consumer kind of push back against that. So there's actually a lot of Airbnb hosts that are not making as much money. And they might just say, you know what? Right now I can get a pretty good price. Let me sell this property so that this way I don't have to deal with it. So a lot of this stuff is going to, and that's going to be the case, especially if the economy weakens. That means that now these Airbnb hosts who are sitting on, these homes that basically, if they're empty, they're not cash flowing anything, but the expenses are just going to grow and grow. A lot of localities, by the way, depending on where you live, they've been using housing as a goddamn piggy bank, just raising property taxes, raising insurance, and it's become really bad to own a home, unless like you're planning on living there personally, And then there's like all these little incentives that a lot of places throw out for you. So if you want to create a primary home, it's actually beneficial. But if you want to try to turn it into like a cash flowing asset, it may not work to your advantage as much as it did in the past. So, and then you also have this demographic shift coming in the next 5 to 10 years with all these baby boomers that are going to be quote unquote, like staying in place, but then also kind of dying now. Like, I'll give you an example. Me and the wife, we're in the house, we're in the market to buy a house. Let me tell you how many times I've gone to an open house, and the reason why the place is on the market is because the person there passed away and their kids live in a different state or a different city. So it's like a weird situation happening where, especially at the higher end of the home spectrum and in the nicer neighborhoods, you have these old timers passing away, and the kids are like, hey, I don't need a 6-bedroom house.
Right.
Yeah.
Let me ask you one final question here on NVIDIA. They just got subpoenaed by the DOJ. Is there an argument that Jensen had to know about this a few weeks ago? There's no way it kind of happens out of nowhere, and him not disclosing this on the earnings is a little bit of malpractice here. Do you think it could go that far?
No, I don't think so, man. Jensen is not he's not a stock pumper, okay? Like, this guy's been in NVIDIA from like the beginning.
Yeah.
Like, there's a difference between a stock pumper and Jensen Huang. Like, just if people think that that's why he sold, you're ridiculous. You're completely out of line. This guy does not, like, have you ever seen pictures of Jensen Huang? This dude is like your average guy. He's not like running around like driving, like, he is a driven, focused individual that wants to make things really good and just develop technology. He's not into the whole like, oh, I need to be the richest man in the world by doing X, Y, and Z. Now, some of the selling that he's done primarily is because it's like, oh, you know what, a hedge against in the future, if he needs the money to, let's say, deploy back into NVIDIA at any given time to show confidence in the company, that's a good thing. You want a CEO with $10 billion laying on the side that, if NVIDIA drops too low, the motherfucker might deploy that money back into the stock, and boom, now you got yourself a cushion. You've got Jensen Huang buying back shares of NVIDIA. That shit would instantly kill any short selling or any market weakness. So I'm always of the mind that just because a CEO sells is not necessarily a bad thing. Now, here's the thing. There are CEOs that, in my opinion, are a little bit disingenuous with the messaging that they have, and they utilize. You know what? I'm not gonna go into it because then I'm gonna sound like an asshole, and then I already have plenty of haters, dude. I really do not want to pick up any more haters, so I'm good. But yes, Jensen is not a pumper, dude. Not a pumper. He could care less about that part of the thing.
Okay, so final question. If NVIDIA goes to 90, do you buy or no chance yet?
No, man, it's going to be a while. Like, you just follow the trend. Like, people really just need to be, I'm going to borrow what Jerome Powell said. People need to be data dependent, and dude, when we were talking last week with Steve,
our good friend, Steve.
This is the part that I don't get. Why is it that we don't use data and say, just think logically for like 2 seconds, like, okay, look, the stock is basically done this. You already see on a quarterly basis that it's growing by $4 billion quarter over quarter. If you compare it against last year, yeah, it's going to be like 100% growth. But then if you compare quarter over quarter, it's not exactly that much. So what makes you think that they're going to have this giant tailwind going forward? And I don't know. Look, NVIDIA over a long term is going to be a great business, great company. It might even get back to its $3 trillion market cap, within the next couple of years. You never know. Like, maybe tomorrow an AI bot comes out, like robots come out, and all of them are powered by NVIDIA GPUs. I don't know. Things like that can happen. But you just have to do things based on risk and reward. And I think as an investor, since I've become a little bit better with that part of my investing, I've done extremely well. Where it's like, okay, how am I going to position myself in this company? Is the risk high? Like, am I buying something at a really high up valuation, expecting like a meaningful return, or am I basically just, like, I don't know. It's weird. Like I was telling Steve, I was like, look, it's a game of musical chairs, and he knows it. He told me himself. It's like,
I remember.
But we've still got another year. And I'm like, why are you going to try to do that to yourself? There are other companies in the market that are undervalued, man. Why
but see, here's the thing. Here's the thing. Steve believes in let's call Steve like a Dan Ives copy in terms of the thoughts he believes on where AI is going. You essentially are saying the opposite. You're basically saying Dan Ives is completely wrong on all of this stuff, which is I
think Dan Ives is a bumper, bro. Dan Ives is probably one of the people that I take with a grain of salt. I think he's a smart individual, but sometimes I think his goal is to be a little bit hyperbolic with his calls, and then this way, like everyone's like, "Oh my God, it's the Oracle of Delphi, like it's Dan Ives," like no, bro, he's a little too.
But in terms of his actual argument about earnings growth and $5 a share of EPS and AI momentum, you just don't believe Nvidia can put up those numbers. That's your argument. Because if you believe they could, the stock theoretically becomes cheap on a forward basis.
Well, the thing is, like, I'm using logic in trying to understand, like, okay, what is the opportunity cost here? That I missed out on the Nvidia run to what? Like, what's the top line that it's going to get to? Every incremental dollar is going to be harder to get to for Nvidia going forward because they're already in my opinion, at a peak. He doesn't believe in that. Dan Ives thinks like, oh no, there's way more room. There's way more room for all these other companies to buy more GPUs. And I'm thinking like, hey, like, dude, how much money do you think that these hyperscalers have that their shareholders are not going to revolt on them for spending money and not getting an ROI? You know what I mean? I'm telling you, there is a limit to how much Microsoft, a limit to how much Google, a limit to how much Meta can spend on this AI infrastructure without showing an ROI and having the board of directors and CFO just say, hold on a second, Zuck.
So Kris, I agree with that. But the problem is if they don't do this, they don't have a growth narrative for the next 5 years, right? So it's kind of like they have to convince the market of something.
I mean, like I said, where's the killer product?
We're all waiting for that. Yeah, we're waiting for that. Yeah.
And that's going to be the key thing. Like, this is where you have to go back and put your Peter Lynch cap on, right? And just say to yourself, like, okay, I see all the bullishness around AI, but how is it being utilized in my day-to-day life? Like, is there a revolutionary product that like we're all buying? Like right now, if you look at the cell phones, like, back in the day when we were at 80, 90, in 08, 09, you could see like the rise of the smartphone coming, right? So it wasn't a question on the rise of the smartphone. It was a question on who was going to be the ultimate victor in the smartphone battle. So right now we're kind of in the same thing, but we just don't know who the AI winner is going to be. I'm not a big fan of the semiconductors because semiconductors is like a melting ice cube because every new generation of chip is going to chip away at your old stuff too. So it's like a weird situation that you have. It's just, like I said, unless we see some kind of killer application that can utilize AI, I'm not so sure that we have a lot more room to go up. And I think a lot of businesses are also kind of like running on this fatigue a little bit, saying, look, we spent all this money on these AI initiatives, but what's the tangible return that we got from it? And if you're not getting tangible return, then the CFO and this, is just going to tell you like, hey, listen, I know you're asking for more money to spend on this AI initiative, but no, like work with what you have,
Okay, final question for you. IWM 300, you still think that happens, even if it's not this year?
Yeah, I think there's a rotation.
So people shitting on Tom Lee right now, you think they're talking too early?
Yeah, they're talking way too early, man. I think eventually money's going to flow into the IWM because there's a lot of opportunity among the IWM. I mean, yes, there's a lot of shitty companies there as well. So don't get me wrong. For me, it's like if you're gonna buy stock, like large caps, you can buy the index because cream rises to the top. But with the Russell, it's the complete opposite, where cream goes into the the mid caps, and the shit remains in the small caps.
Yeah, you could get cream pied.
So I would say we're on the opposite end of that stuff, man. So I'd say just be careful. The Russell, buy the stuff that is high quality in the Russell, undervalued, high quality, good growth, and just, and then be in that and not on the other side of things. The other thing is evaluation multiples on the Russell, if you look historically, are actually below what they historically trade at.
Yeah.
So that's another thing to kind of keep in mind.
All right, Kris, I am putting Chris's Twitter in the chat. He has a Patreon as well. If you like his thoughts on the market, you may disagree with him on some stuff, but if you, in general, want to get his perspectives, it's like $10 a month.
Can I just say something?
You check
I think there's this undertone that I'm bearish just to be bearish. Like, no, I'm not. There are plenty of companies that I'm super long on. Okay, like I'm not a perma bear by any means. I don't just like wake up in the morning. I'm like, okay, who am I? Like, I'm not like the guy from Bear Cave where he's looking to short things.
Yeah, and also before you continue, you think we're gonna have a bull run towards the end of the year. So literally, you are not bearish at all, to be honest.
No, exactly. And this is the point that like I really want to hammer into everyone. Like, look, I just tell it like I see it. Okay. And if it works out, it works out. If it doesn't, it doesn't. And like I said, I'm trying to develop my own track record. Sometimes I get things really right, and sometimes I get things really wrong. Like clearly, I got Palantir really wrong, but that doesn't mean that I'm gonna get it wrong all the time. Maybe in the short and medium term, Palantir comes down, and everyone's like, "Oh, Kris is a genius." All of a sudden, again, it's like, no, Kris is not a genius. Kris just happened to be right at that given particular time. So. Everyone is smart. Everyone is dumb. It's just a matter of when we're talking about it and what time period. The key though, and maybe this is something that I'll do next year, Amit, I will reveal my total portfolio returns in the last 5 years. And this way people can see, like, wait a second, this guy is a fucking serious deal. Like, he's not
dude, here's the thing. I think a lot of people know you've done very well over the past couple of years. You get a lot of picks right. The problem is you're bearish on two names that people don't want anyone to be bearish on, obviously Palantir and Nvidia. And that's what gets people upset. But my response to a lot of those people is like, if you disagree with someone on a stock pick, that cannot be the reason you harass them or hate them. That's just like childish. Like, you're not a serious investor if you can't disagree with someone on one stock but not accept their analysis on other stuff.
Dude, it's a natural feeling, man. Like sometimes you'll be like, I'll be at the craps table and there'll be people playing, and some people will be like, oh, they're only do pass line, and sometimes I'm like, no, I'm gonna be the don't pass. Like, and the thing is, people get upset. They're like, oh, look at this guy over here, like he's at the don't pass line. Like, no, that's how it is. My bet doesn't impact your bet. Your bet doesn't impact mine.
Yeah.
Like you think me shorting Nvidia has any impact on you if I shorted it? No. Like, I'm not big enough to make market moves like that. So stop hating on me for just saying an opinion. Now, the thing is, the part that I never get is that people, whenever they push back really hard, I feel like it's because inside they know I'm right. Like,
or at least they want confirmation bias, and if you're not giving it to them, it's a natural human instinct to get upset. Yeah.
See, the thing is, like, me and you, we've gone back, and I've said, "Oh, Palantir is overvalued." And you have your conviction. You're like, you know what, Kris, you're wrong. That's it.
Yeah, that's the end of it. That's it. We're still friends. Like, it's not, doesn't change anything. Yeah.
So it's a matter of just two differing opinions, and the thing is, because you're a debater, you understand that if someone can just say something and then throw you off and basically, get you to tilt, that means that your conviction wasn't real in the first place. In which case, you probably shouldn't be in it anyway. So if your idea is, let me go like uber, like reactive and be like, oh no, fuck this guy. Like, bro, just think of like, put a mirror up and be like, hey, wait a second. Like, am I overcommitted in this position?
I think this is so important. I remember in the early days when I made the initial bet on Robinhood and I was listening to some bear cases, I never felt I should sell. I felt, wait, no, I'm right, you're wrong. And someone's going to be right or wrong. And you have to have conviction you're right. So if you're super bullish Nvidia right now and Kris comes on for 10 minutes and says, oh, I think Nvidia is going to 85, and you start struggling with that conviction, that means you have to get a lot more conviction about Nvidia.
Yeah.
Because one person should not throw you off.
Do more research, man. Like I tell people all the time, if you don't feel confident about a position, do more homework. That's how it is when you're doing your homework. Like if you don't feel comfortable with your answers, then just go back, do your homework again. You know, like, oh, wait a second, Kris is wrong. Okay, good. Let me just confirm if he's wrong.
Yeah, exactly. You know, let me just confirm my own bias. Yeah, no, I think in general the channel appreciates you. There's some people that will say names, and you know, you can't stop a lot of people from saying.
It's all right, man. Like I said, freedom of speech. People can say whatever they want. It's all good. You know, it doesn't make a difference. I would say if people are looking for some yield and they just want to chill, look at the cell phone tower companies. They've actually done really well. If you want to bring it up on Webull, American Tower and Crown Castle.
Oh, you know, Crown Castle. Yes, I remember. CCI. They were up today, were they? Yeah. There you go. So they're up because the market thinks that phone service is never gonna go away, essentially.
Well, one of the things is that these like CCI, look at the yield on it, like the dividend yield, right? It's almost 6.25.
Yeah.
No, it's not 5.5. It's 6.25 right there. You can see it, dividend.
Oh no, but dividend yield is 5.5 though. You see that right there?
Where?
5.525 under PE ratio. I'll get it on Google Finance. I'll get that one there.
Oh yeah. Okay, yeah. So I'm sorry, I was thinking from like a month ago when it was a little lower, because that's how it's inversely correlated, right? So if the stock price goes up, your dividend yield goes down, right, unless the company raises its dividend, in which case the dividend is going to grow. So same thing with like American Tower. So these businesses, they're capital heavy, which means that they have a lot of debt on the balance sheet, but it'll be easier for them to service. And then as they're servicing that debt, it frees up future cash flows to increase dividends so that this way they can keep growing. So if you look at like Crown Castle, look at it over a 20-year period. Like go to the max.
Okay. Wow.
Right?
7x in about 20 years. Yeah.
So these are the kind of like businesses that you kind of want to, look at. The thing is the Crown Castle's growth rate might be slowing down significantly, by the way, just because of I don't think a lot more cell phone towers are going to be built anytime soon. But once again, these guys are basically just charging rent, right? You have all these towers, you build it, you amortize it, you charge rent, and every year you charge a fixed elevator more and more and more. It's like it's literally like owning a building, right? But instead of owning a building, you're owning a cell phone tower. Yeah.
All right. Thank you, Kris, for your thoughts on this red day. Overall, a little bearish on some of the tech stocks, but you think the broader market does okay towards the end of the year. And I guess we'll see what happens with this.
Also, one day we need to talk about insurance, because I think there could be some opportunities in some good insurance.
Are you turning into a baby Buffett right now? What's going on here?
No, man. These businesses are cash flow heavy businesses, bro.
That's what Buffett said in 1950, and now he's majority insurance. Now he loves this shit. So.
Here, look at. I'll give you a couple if you want to take a look. That's like slow growth, but it does really well. Look at MTG, I think.
Okay, MTG. Dividend yield of 2%.
Right? But go to like a 5-year chart.
Let me pull it up.
Or a maxed out chart.
It looks better on Google, yeah. MTG. Insurance should also be a defensive in a recession, theoretically, right?
Technically, yes and no. Depends on which part of the insurance market that you're servicing. Like, let's say right now you're servicing an industry where basically it's like business insurance and businesses go down and now you have to pay out, then you're not really going to do very well. If you're doing, it just depends on the type of insurance that you're providing, basically.
Yeah. All right.
Yep.
Cool stuff. Thank you, Kris. Appreciate it. Kris's Twitter in the chat, and we'll talk to you later. Thank you, Kris.
Later, dude. Take care. Bye.
All right, cool. That's it for us, folks. Yeah, look, I think Kris brought some good insights. Ultimately, you're going to have to make your own conclusions in terms of what you think about when it comes to NVIDIA. I would be really surprised tomorrow if it doesn't get a little bit of a bounce, given how bad it was today. If it doesn't get a bounce tomorrow, that means there's something struggling with the narrative around NVIDIA, which has been crystal clear and really perfect for the past 8 months. If we see another down 3-4% day tomorrow, that means some whales are unloading. The narrative's getting hit. The DOJ subpoena thing is becoming a narrative that people are afraid about. and it might end up hurting the broader market. I do think it sets it up for a nice Q3 because now Nvidia is not at 130. Maybe it's at 105, 110 going to earnings. They crush earnings and you get rate cuts, you get a good election cycle, and then you keep moving from there. But does Nvidia need to be $140 right now? Probably not. Does it also need to go to 85? I don't think so. So a sweet spot in this 100 to 110 range is not that crazy. And now tomorrow, we're going to see if the market continues to give a bid to Nvidia. Palantir also at $30.14, so it went right above that $29 range that it was stuck at when Nvidia was down about 2.5%. S&P 500 recovering a little bit after hours, still down 0.13, and then QQQ was down 0.5%. Now it's down 0.18%. At 460. Again, S&P right here at 551.37 on the day. All right, that's it. Thank everybody for being here. Tough day in the markets. We'll see what ends up happening. Not unloading and buying the dip yet on any stocks. I'll let you guys know if I do buy the dip, but I want to see a lot more pain before I get excited to buy the dip. And we'll see if we get that opportunity or not. September 6th, this Friday, going to be very important for Palantir after hours in terms of the S&P 500. By the way, that video is coming out in 45 minutes, so 6:15. That video will be out if you haven't had enough of me today, and I'll be talking about S&P 500 inclusion. And then I'll be live 8:20 on Friday, and we'll see if this jobs data is pretty decent. Also, while Kris was on the phone, Kamala Harris just came out with a new policy. She's going to expand the small business tax deduction to $50,000 from $5,000. Dude, I didn't even know there was a small business tax deduction. I feel like I should have been taking advantage of this. Like I have write-offs, but is there like a formal tax deduction? So apparently if you start a new business, you'll get $50,000 in tax deductions. And she's getting rid of a couple regulations to start a business. And a couple of other things she's doing. Her goal is collecting 25 million new small business applications in her first term. So 2025 to 2029. Joe Biden had 19 million. So she wants 6 million more than Biden in that first term if she ends up becoming a president. This is right before the September 10th debate. I forgot there's a debate on September 10th. So September 10th, we're going to be a debate. There's going to be a debate and we'll see how that plays out. But yeah, there you go. So Kamala Harris, right before we get into the close, $50,000 tax deduction. We'll see how the market interprets this one. I mean, that's kind of bullish for businesses. I think that's kind of similar to like a Trump policy. So now it seems like they're converging on policies that would be effective for businesses and maybe coming to some type of agreement, both of them in terms of business policies that would be useful. All right. So that's what you got. Thank you everybody for joining. We'll be back tomorrow morning, 8:45 a.m. and we'll keep going from there. Bye, everyone. Have a good one. Thank you for joining. I'll see you guys tomorrow morning. Good night.